traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, June 20th, 2019, and this is the Daily Report for Gold and Silver. Phenomenal upside move in the precious metals, gold particularly moving up over 3% on the day. Some of it has to do with a delayed reaction to what the Fed said yesterday. They left interest rates alone, but they did continue to talk about a rate cut. But a bigger portion of today's move is in response to a provocative move by Iran when they shot down one of our U.S. drones. What the response will be from the United States is a complete unknown, and unknowns is what moves gold pricing higher. Let's take a look at our current price board. Traders, as I said, a big move in gold, $1392.30. That's up $43.50, a rise of 3.23%. Platinum rose, but very, very nominally, $806.90. That's only up $1.10. And then palladium actually dropped by over 1%, by $16.50 at $1476.10. And silver gained a nice whopping 45 cents today, about a 3% gain at $15.41, and all of that with a good tailwind from a weaker U.S. dollar down about 0.4% at 96.15. Traders, let's take a look at some of our technical studies and charts. We will talk about our current trade as well as why we moved our stop, where we moved it to today, along with our exit strategy. Traders, what an incredible day in terms of the move that gold made. Simply spectacular. Currently, we're looking at gold up almost $43, $42.90, sitting at $1391.70. There's a couple of things that are critically important. First of all, we have not seen a move like this in quite some time, a almost $50 move in the market. It has taken us past what many believe to be that ultimate glass ceiling, which sat roughly at $1370. For the last 3 years, the market has on multiple occasions attempted to breach that price point only to fail and move back lower. We'll see that when we look at a weekly chart. That did not happen today. Now, we are long. We are long from 39.10. We had our stop that we moved up the other day, and I raised it again today. And I raised it to a point that should keep us protected if, in fact, this market wants to move higher. And I based it upon the 0.618% extension of this move here. In other words, from here to here, and then we started from here, which is really the series of bottoms that we got just prior to the market taking off again. We put our stop at 1379.13. So we put it just below this particular price point. And my sense is that should things continue to heat up, and really what we're looking at is what is going to be the factor as far as Iran is concerned and any kind of counter move or retaliatory move that the United States makes for shooting down their drone, that could really send this market up and up much higher. In terms of an Elliott wave count, we are looking at various levels. We've surpassed the 0.618 extension. This particular Elliott wave count that we're looking at is looking at about 1420 for the fifth wave to conclude. And if we get a one-to-one of these two waves, which I'm not looking at as being that realistic, that would take us to about 1452. However, we are under $8 shy of 1400. So the fact of the matter is, I would not be surprised whatsoever to see gold trade to 1400, 1410, and then back off. Nonetheless, we have locked in profits on this trade in at 39. Even if we get out where our stop is, it gives us another 40. When we add that to the $45 of the last trade, we're looking at approximately a 90% return over the last couple of weeks. And traders, in any investment asset class, that's an exceptional return. We were fortunate in that we were positioned at the proper time when the market moved. Because as I've talked about on multiple occasions, trading is a science. It is also an art, but there's an element of luck or timing involved. And fortunately, that has been working on our side. So traders, maintain your current long position. You have moved your stop, maintain your current stop. And we'll look to see what happens tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.